issue in financial reporting by Modupe Sarat. Introduction. The ethical issue is whether to book a possible new contract that under standard accounting practices is not acceptable to list as revenue to make the company financial report look better by recording more income. The problem is whether the booking of a negotiation will constitute fraud. For accounting principles, it is understandable to follow the generally accepted rule for reporting revenue, for there is no established rule for a negotiation to be listed when the deal has not been completed. However, accounting for booking is making a report of a financial transaction. Therefore, a negotiation is not a transaction and, if reported, would constitute a fraud. Is fraud ethical for what a fraud is, and what is ethical for financial reporting? What a fraud is. From a personal perspective, fraud includes the act of not telling the truth, a deception, a fake, and a swindle. Fraud is a scheme of counterfeits. Technically, a fraud is a charlatan of making a false statement for attention and financial gain for advantage. In accounting, a fraud is a scheme for profit with fabrication of revenue and expenses as money, making hoax for financing social infrastructure with indicating an agreement is revenue, is the buzzword description for cooking the books. According to Harrington, 2003, company management lied or stretched the truth beyond belief for a financial report to dupe the auditors is the scheme of fraud for cooked books. The scenario for this case is about John's ethical dilemma. According to the article posted in the blog in June of 2013 by Alexis Babb, John is the chief financial officer for a venture-backed tech startup, Babb 2013. The issue is John signing off on a financial report for funding is unethical for his knowledge of what constitutes a fraud for accounting practice. Accounting business for financial reports awaiting negotiating orders for adventure to boost the company revenue for profit is technically stretching the truth for a lie. John knew this was fraud. However, to lie to keep a business or to tell the truth to lose a business is a painstaking choice. Likewise, to lie is bad for delaying the truth, and in the end lies hurt more for their irreversible damage. For which one is better, out of business for fraud or close of business for lack of funding? If John does not sign off on the report, the business will suffer financial hardship for not qualifying for more funding. The practice of deception in accounting is called cooking the books. On the other hand, is there a choice for what is ethical for financial reporting in a business? What is ethical practice for financial reporting? Although any act of deception is fraud for the notion that honesty is the best policy for practice apply to business. Financial is monetary for business transactions, for reporting how we get money and how we use the money for accounts receivable and payable. To go beyond that is the venture for profit. Is it ethical to lie for profit? Well, sometimes one hat does not fit all. Business, in my view, is multinational and transnational for what works best to make profit. However, not being straightforward or a hesitation to say things exactly as it happened for application is not a fraud. Assuming I am John, the CFO, I will sign the financial report for indicating that the negotiation order is a boost to the company for profit because we are losing our customers, which is not a fraud for stating the fact why a negotiation order is revenue for profit. Nevertheless, cooking the books is falsified financial statements, as stated in 2011 by Firth, Rui, and Wu. According to the journal article, findings suggest that corporate governance structures have an effect on the occurrence and detection of financial fraud. Increases in their cost of capital, wider bid-ask spreads, of modified audit opinions, and greater CEO turnover when they manipulate their accounts. P.17.2. What constitutes fraud is not what is ethical in practice. Fraud is clearly unethical because it is considered intentionally conniving to deceive. Statement of the fact for association to include something in a reporting is not a fraud for unethical. In pure financial reporting, cooking the book is the prevalent practice in accounting for deliberately manipulating the numbers to meet the earnings goals of the CEOs. A report by Michael Alice and Srikant Datar, 2004, outlined the trends for unethical practices as well on how to stop the practices for cooking the books. Alice and Datar, 2004, have traced the trend for cook the books to include the recent series of corporate scandals has resulted in an unprecedented crisis in accounting. Investors have lost faith in financial statements on the assumption that falsifying the books has become a routine practice in corporate America. Restoring the credibility of financial reporting is clearly an urgent priority, as indicated by the passage of the Sarbanes-Oxley Act, which mandates that chief executive officers personally certify the accuracy of their firm's financial statements. The approach being contemplated by the accounting profession itself is a shift away from the rules-based approach to financial accounting standards in U.S. generally accepted accounting principles towards the principles-based approach of international accounting standards. Both these initiatives draw attention to the fact that accounting standards are only useful and effective if they are actually implemented by firms in the way the standard setter intended. In other words, the need to ensure implementation of accounting standards by managers who have an incentive to beat analysts' earnings forecasts means that accounting standards have a management control component. Fraud versus ethical. Going back to the common knowledge for honest is the best policy for the best practice is to tell the truth. Fraud is the opposite for knowingly manipulating the truth for deception, while ethical is giving reason for action to indicate otherwise for finding the alternative to a problem for a need. For example, a silence for not making a statement for knowing the truth is not a conspiracy to defraud, while questioning a report for whether to sign for agreement with knowing something is not quite right or wholly is not a fraud with given reason or to note for an alternative. Ethical considerations include the pros and cons for what else is possible. However, manipulation of the truth is fraud, and manipulation of numbers to indicate otherwise is intentionally making a shift to reflect that what it is not for profit is fraud. In John's case, the CFO. If John can indicate in the financial report that he is unsure if a negotiation order is qualified revenue to include in the report for the alternative to boost the company to increase profit for funding, then John should sign the financial report. Do not consider his action to be fraudulent because part of the business is about doing whatever is possible to make a profit. Since his signature will save the company from not closing down due to lack of funding, his effort to indicate the alternative to get funding is ethical for business practice. On the other hand, if the negotiation order did not go through as expected, John should also be obliged to inform everyone of the possible consequences. In business, ethics is transparency for review to make adjustments. Miscalculations or mistakes do not necessarily constitute a fraud for cooking the books, and a number of mistakes can be a transposition for error. However, that can complicate cooking the books for not making notes for errors or changes. It is good practice to review reports for errors and make note of changes made to report for adjustments and revisions for accuracy. Ignorance for inaccuracy can be a fraud because it is a requirement for facts to produce a correct financial report. The analysis of the matter is you have to be honest with what you know to be ethical to avoid fraud. Likewise, making changes to a report, whether by changing the words or numbers around without evidence to support the fact, is technically plagiarizing with words or stealing by numbers. To prevent fraud for ethics is to report things accurately with following the set standard, protocols, and policy for procedures. Creating unfamiliarity gives the notion of fraud. Following the set standard for accounting practice is ethical for doing what you know it to be. Your action and what you do can either harm or help. For if cooking the books will harm the company for fraud, then it wise not do it. Views for conclusion. For the conclusion, the ethics for business practice is to know thyself for integrity to tell the truth because business is about influence. The decision not to compromise one's integrity is what one values most, and that also includes representing one's company. What sustains a company is a good reputation for integrity and honesty that is different from loyalty for a different topic. Be true to yourself for telling the truth, and you will never go wrong. Reference: Allais, M.G., and Detar, S. 2004. How do you stop the books being cooked? A management control perspective on financial accounting standard setting, and the Section 404 requirements of the Sarbanes-Oxley Act. International Journal of Disclosure and Governance, 1, 2, 119, 137. Babb, Alexis, 2013, 6. Tell the Board, Reporting of Bookings, Hackworth Business Ethics Fellow, 13, http://www.skew.edu/r/ethics-center/ethics blog/16454/2-tel-or-not-to-firth M. Rui Ohm and Wu W. 2011. Cooking the Books, Recipes and Costs of Falsified Financial Statements in China. Journal of Corporate Finance, 17-2, Harrington C. 2003. Forecast, Clear Skies, CFA Magazine, 14-2-28, 34 Ethical Issue in Financial Reporting 9.